Welcome. In this video, Zbcn coin has just collaborated with Algo coin. What will happen now? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze the Zbcn coin. When we analyze price action more deeply, it becomes clear that reaction zones in specific areas play a significant role. In this context, based on the current technical structure we are observing, the presence of a bullish order block positioned just below the current price stands out. This area is one where price previously gave a strong upward reaction and currently holds the potential for a similar dynamic. These types of zones are where institutional buyers, namely high-volume investors, typically execute their trades, and they function as liquidity-rich regions that often serve as strong support levels. As price approaches this zone, it is highly likely that buyers will re-enter the market and push the price upward. Bullish order blocks typically emerge at the beginning of bullish candles that follow a period of decline, usually seen as consolidation or imbalance zones. These zones are often where large investors or market makers take positions, so when price revisits these levels, strong buying activity can be observed again. In this light, the fact that price previously bounced upward from this zone is not coincidental. It reflects that buying pressure was concentrated there and that buyers are inclined to defend that level. Therefore, if the price returns to this level, a similar reaction would not be surprising. Technically, these zones are important for both entering positions and managing risk, as stop-loss levels can be placed just below such strong areas to minimize potential losses in case of a breakdown. Furthermore, the fact that the price previously bounced sharply from this area highlights the liquidity still present there and indicates that it remains an important support level. The frequently cited principle in technical analysis that history repeats itself is relevant here. A level that previously saw intense buying pressure being revisited could prompt the same participants or new ones to take positions again. Especially if this zone is part of a broader uptrend and price remains above this trend, the order block becomes even more critical. A continued bounce from this zone would indicate a healthy continuation of the trend. This also fosters a positive market sentiment and can attract more participants into the market. Moreover, the fact that this order block has not been tested multiple times is an additional advantage. In technical analysis, the fewer times a support or resistance level is tested, the stronger the liquidity at that level tends to be. Frequently tested levels may see diminished liquidity over time, increasing the likelihood of being broken. However, the bullish order block we are analyzing appears to be relatively fresh and comes from an area that saw aggressive buying reactions, which increases the probability of a similar strong response if price revisits this level. In scenarios where such a technical structure exists, investors should also pay attention to a few additional elements. First, the momentum of the price before reaching the order block is important. If the price is falling sharply and quickly from above, it may indicate a renewed downtrend rather than a correction. But if the price is pulling back gradually and in a controlled manner, it is generally seen as a healthy correction, and it becomes more likely that price will continue its upward move with support from the order block. Indicators like RSI, MACD, or volume can also provide valuable confirmation at this level. For instance, if the RSI approaches the oversold region as price reaches the order block, it may present an attractive opportunity for buyers. If increased buying volume is also observed at this level, it would be a strong confirmation signal that price may initiate a new upward movement. The convergence of these indicators and supporting structures at the same level creates a scenario where investors can open positions with greater confidence. Finally, a bounce from this bullish order block may not just signal a short-term correction, but could also indicate the beginning of an uptrend on higher timeframes. If this order block was identified on a larger time frame, any reaction from it is likely to be more lasting and impactful. Higher time frame technical levels tend to provide more reliable signals and attract larger market participants compared to lower time frames. Considering that price previously reacted strongly from this level, it represents a highly important observation and strategy zone for investors. A retest and the corresponding reaction at this level could be decisive in determining the market's future direction. If price revisits this level and encounters strong buying pressure, it would indicate that buyers remain dominant and the uptrend could continue. However, a breakdown of this zone could signal a potential trend reversal or a deeper correction. Within the framework of all these factors, the bullish order block located just below the price currently stands out as a highly critical technical structure. This area is not only a short-term support level, but also plays a key role in the sustainability of the overall market structure. Investors should closely monitor price as it approaches this level, analyze the structural data supported by the indicators above, and formulate their strategies accordingly. Trading at such levels with the right strategy can offer investors both lower risk and higher return potential. But we can't rely solely on order blocks for analysis. Let's take a look at other metrics as well. Stay tuned.
The Elliott wave theory is a powerful model in technical analysis that asserts price movements progress in a specific pattern based on psychological cycles. According to this theory, markets move with a 5-wave impulse structure followed by a 3-wave corrective structure. The impulse waves consist of waves 1, 2, 3, 4, and 5, with the third wave often standing out as the strongest and longest wave. In the currently analyzed price structure, there is an impression that the third Elliott wave is actively continuing, and in this case, determining targets using Fibonacci extensions is a very common and effective method. Especially from the point where the third wave begins, the price movements may indicate strong buying interest among investors and that the market is developing a serious upward momentum. The third wave typically features a steep, steady, and long-lasting rise. This means that during this wave, market sentiment generally turns positive, buyers take control, volumes increase, and price begins to move sharply upward. In such scenarios, Fibonacci extensions play a critical role in measuring how far the third wave might extend. Fibonacci extension levels show potential target areas the price could reach in the future based on the length of previous waves. In this context, the 1.618 and 2.272 levels stand out as key target zones for the third Elliott wave. The 1.618 level is generally accepted as the minimum target because the third wave must be longer than the first wave, otherwise Elliott's principles are violated. If the third wave is shorter than the first, then the fifth wave is likely to be the longest, which contradicts Elliott's basic rules. Therefore, a third wave structure that remains below the 1.618 level usually signals a weak market structure. However, considering the current market outlook and the steep, steady nature of the movement, a target above the 1.618 level appears more likely. The 2.272 Fibonacci extension level more clearly reveals the strength of the third wave. If the price movement continues up to this level, it indicates the presence of a strong bullish momentum in the market. A third wave that lasts up to this point is usually characterized by investors buying aggressively driven by FOMO, fear of missing out, positive news flow, technical indicators moving into overbought zones, increased social media interest, exploding volumes, and a price that tends to accelerate as it rises. During such periods, indicators like RSI may enter overbought regions, the MACD histogram may widen, volume profiles may surge upward, and the overall market trend can adopt a distinctly positive momentum. At the same time, the third wave's extension to these levels also marks a phase of technical as well as psychological maturation. In such cases, investors developed a confidence in the strength of the trend. Every pullback is seen as a buying opportunity, which fuels the continuation of the rally. However, it should be remembered that after reaching the peak of the third wave, the price will transition into the fourth wave and undergo some correction. Therefore, being prepared for potential pullbacks following the price reaching the 1.618 and 2.272 levels is equally important. Along the third wave's journey toward its targets, complementary factors such as pattern analysis, volume profile, momentum indicators, and support-resistance transitions should also be considered. For the price to reach these Fibonacci targets, resistance levels encountered along the way must be broken with volume, psychological barriers overcome, and investor interest maintained continuously. As these conditions are met, both the 1.618 and 2.272 levels can be targeted sequentially. Moreover, if the 2.272 level is surpassed, higher Fibonacci levels like 2.618 and 3.618 may also come into play. However, the 2.272 level is generally regarded as a strong and satisfactory target for the third wave, so some profit-taking and a transition to the fourth wave are expected around this point. Such a structure also gives confidence to investors because a successfully formed third wave indicates that the market is progressing within a technically healthy Elliott structure. This increases the predictability of subsequent waves, allowing for more reliable projections, especially for fifth wave targets. All these factors highlight why the third wave holds such a critical place in Elliott analysis. In conclusion, the current technical analysis suggests that the price is moving within the third Elliott wave, and the minimum target for this wave is the 1.618 Fibonacci extension, while the ideal target is the 2.272 extension. It should also be noted that these levels represent strong resistance zones technically. As the price approaches these areas, volatility may increase and buying-selling pressure may intensify. Investors may consider these levels as profit-taking zones. However, as long as the market structure remains strong, these levels can serve as stepping stones toward the price's long-term targets. Thus, this analysis forms a basis for strategic investment decisions and allows for technically reliable projections.
Zebec's announcement today on the X platform clearly reveals the company's vision to expand payment technologies and integrate with more blockchain networks. With this statement, Zebec officially announced its integration with the Algorand network. This strategic move by Zebec is considered part of the company's growth plans and also makes a significant contribution to the Algorand ecosystem. The announcement details that Zebec has integrated Algorand, ALGO, into its card and payroll payment tools, and now Algo holders can spend their crypto wherever MasterCard is accepted via the Zebec card. This provides practical usability for users and stands out as a very important development for the integration of cryptocurrencies into everyday life. Algorand's compliance with the ISO 2022 standard and its high-security architecture have been cited as key foundations for the success of this integration. ISO 2022 is a global standard used in financial messaging, and compliance with this standard is especially critical for enterprise-level integrations. Algorand's readiness for this standard will act as an important bridge between traditional finance and the crypto world. Zebec's integration with a blockchain network that holds such a standard creates an important advantage not only in terms of security, but also in easing the adoption to this technology by financial institutions. Therefore, this integration can be seen not only as a technical step, but also as a strategic and reputational gain for Zebec. The fact that Zebec card users can now shop with ALGO ensures that cryptocurrencies are recognized not only as investment tools, but also as a payment method with real-world use. The integration with MasterCard greatly simplifies the user experience and increases the spendability of cryptocurrencies. Considering MasterCard's global acceptance network in traditional finance, this development offers a very attractive opportunity for ALGO holders. Users can now comfortably use their digital assets in daily life, which will accelerate crypto adoption. This development creates new opportunities not only for individual users, but also for businesses. For example, companies wishing to pay their employees with cryptocurrency have an easy and secure solution with this system. Zebec's hints about the future while announcing this integration are also noteworthy. The announcement stated that Zebec and Algorand teams will share more updates about payroll payment solutions within this week. This indicates that Zebec aims to expand usage not only for individual users, but also at the corporate level. Moving payroll payment systems onto the blockchain offers significant advantages in terms of time, cost, and security, especially for companies operating globally. International payroll payments, which can take weeks in traditional systems, can be completed within minutes with blockchain technology. Zebec's solutions in this area are designed to benefit both employers and employees. From this perspective, the collaboration between Zebec and Algorand shows that a new phase in the evolution of financial services has been reached. Furthermore, Zebec's choice to announce this integration specifically with Algorand is no coincidence. Algorand is known for its low transaction fees, fast confirmation times, and eco-friendly design. These features make Algorand an ideal platform for daily use. Since speed and cost are very important in payment systems, Zebec's choice is understandable. This way, Zebec can offer its users a faster, cheaper, and more reliable payment experience. This development also increases trust in the Algorand network and expands its use cases. Thus, Algorand is beginning to stand out not only with its technical features, but also with real-world applications. Innovative projects like Zebec choosing this network will further strengthen Algorand's position in the industry. In summary, this development is a good example of the crypto world evolving into a more mature and accessible structure. The combination of traditional payment systems with crypto technology provides great convenience to users and also creates a positive impact on the overall reputation of the sector. Zebec's steps in this direction may produce positive results not only for its own growth, but also for the entire crypto ecosystem. The success of this integration could serve as a guide for other projects. If such integrations become widespread, cryptocurrencies could become much more common in daily life, and the advantages offered by decentralized finance could reach broader audiences.
Zebec's visionary move can be considered an important milestone in building such a future. Collaborations with strong infrastructure networks like Algorand will advance the sector not only technically, but also in terms of user experience and trust. At this point, it is also worth emphasizing Zebec's innovative nature and adaptability. Surviving in the constantly changing and developing crypto world is possible not only by having strong technology, but also by making the right strategic decisions. Zebec manages to be a strong player in this fast-changing environment thanks to its ability to produce user-focused solutions and collaborate with the right partners. This partnership with Algorand is part of Zebec's long-term plans for the future, and this step is expected to yield much bigger results over time. Especially with the deployment of payroll payment systems, it is inevitable that Zebec will become a platform serving not only individual investors, but also large corporate firms. This could create significant long-term value appreciation potential for the platform's token, Zbcn. In conclusion, Zebec's integration with Algorand is a vivid example of blockchain technology's potential to solve real-world problems. The ability to carry out sensitive and regular transactions like payroll payments on the blockchain in a secure, fast, and cost-free way will greatly increase system efficiency. The payment convenience brought by Zebec Card allows users not only to hold cryptocurrencies, but also to actively use them, and this is considered revolutionary in the crypto world. With the spread of such integrations, it will be inevitable for cryptocurrencies to become even more a part of daily life. Zebec and Algorand taking a leading role in this process will bring great benefits to both their brands and the industry as a whole. Upcoming updates will further clarify the scope of this collaboration and demonstrate how users can maximize their benefits from this technology.
Yes, friends, I hope you like the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.